चलो, very good morning everyone. How are you all? Ready for revision? So today we'll start with the revision of AS 26, intangible assets. Intangible assets. Okay. Live student, whether my voice is audible or not, respond fast. Let us wait for 1 minute. Chalo, now we will start with the revision of AS 26, intangible asset. What is the meaning of intangible asset? Intangible asset are identifiable, non-monetary, without physical substance. Identifiable, non-monetary, without physical substance, which is held for three purpose. Same purpose whatever we have done for AS 10. That is held for use in the production or supply of goods or services, held for rental to other or for admin purpose. Correct? Now what do you mean by identifiable? An asset is identifiable if any one of the following conditions satisfied. One condition satisfied, so it will be identifiable. First, that asset is separable. Asset is separable. It means capable of being sold separately or given on rent separately or can be exchanged separately. Means if it can be separated from other asset, it become what? Separable. Understood? It is as simple as if I say this furniture is separable from this building, the furniture become an identifiable asset. So any intangible asset which is separable from other asset, it become a identifiable asset. Correct? Second condition is what? The asset arises from contractual or any other legal right, even though it is not separable. So any asset which arises from contractual or any other legal right which is not separable, then also it is what? Intangible asset. For example, you purchase some license. Correct? You acquired some license to operate some cinema hall. So that license will be a contractual right to run cinema hall. So that is an intangible asset, even though it is not separable, even though it cannot be transferred, even though it cannot be exchanged, even though it cannot be exchanged. Identifiable, you understood? Yes, sir. Then what do you mean by non-monetary? Non-monetary asset are those assets which are not monetary assets. So monetary asset has been defined in AS 11. So what do you mean by monetary asset? Any asset, in simple word I say, any receivable which are realizable in cash. So any receivable which are realizable in cash become a monetary asset. Correct? So intangible assets are not realizable in cash, are not held to be realized in cash. Understood? So monetary assets are money held, an asset to be received in fixed or determinable amount of money. So it will be always a non-monetary asset. Correct? Without physical substance means, can I say it will not have any physical substance. For example, if I say tangible asset, so tangible asset will have some physical substance. But can you say any intangible asset requires some storage device? So it will be stored in some device. For example, if you say software, so software will be stored in a CD or in a pen drive or in a hard disk. Correct now. Or if I say any website etc. will be stored in a server. Correct now. So it requires some storage device which might have some physical component. So what AS26 says that even though it has some physical substance or tangible component, the cost price of that tangible component is insignificant as compared to the cost price of intangible component. Therefore, it will be identified as intangible asset, not tangible asset. Correct? But sometime what happens? Ki both tangible component and intangible component may be significant. In that case, what will do? Correct now? If there may be some situation when tangible component and intangible component you have acquired and both are significant. Best type of example will I will say you purchase a laptop with operating system. So both are significant. In that case, what AS26 says that if intangible component is an integral part of tangible component, integral part of tangible component means that intangible cannot be used without tangible component, then it will be accounted as property, plant and equipment, and AS10 will be applicable. AS10 will be applicable. Entire asset will be treated as property, plant and equipment. But if intangible component is not an integral part of tangible component, then we need to separate it and apply AS26 for intangible component and AS10 for property, plant and equipment. Understood? Yes, sir. Recognition criteria is as same as what we have done for property, plant and equipment. Two conditions for recognition criteria: if it is probable that future economic benefit will flow to the entity and the cost can be measured reliably. However, in this intangible asset, can I say this cost can be measured reliably? This is also important condition because there are some intangible assets for which cost cannot be measured reliably. Best example is self-generated intangible asset. In that case, intangible asset will not be recognized. Understood? Correct. So both the conditions need to be satisfied for recognition purpose. Okay, sir. Then once recognition criteria satisfied, then we should do initial measurement of intangible asset on initial recognition. So that will be done at cost. So an intangible asset should be measured initially at cost. Now if it is a separate acquisition for monetary consideration, then how to find out the cost price? The cost of a separately acquired intangible asset will comprise of following. Similar to what AS10 I will say, though it will be invoice price less trade discount rebate plus non-refundable duties and taxes. Correct? Yes, sir. So this will be purchase price. In this will add all the directly attributable cost of bringing the asset to its usable condition. Till the date when the asset is ready or available for use. For example, registration charges, brokerage cost, professional fee, etc. Correct? The borrowing cost will be also added subject to AS16 as per the condition given under AS16, and government grant, if any, will be deducted as per the requirement of AS12. So AS12 has given two options: either it can be deducted from cost price of asset or it can be treated as deferred income. So if you have opted for what deduction wala point, then it will be deducted from the cost price of asset and this will become the cost of acquired intangible asset. Chalega. Then acquired in exchange of non-monetary asset, once again similar to AS10. So what AS10 means, AS26 says that cost price of intangible asset acquired will be equal to fair value of asset given up plus minus cash adjustment or fair value of asset received, whichever is clearly evident. However, if the fair value of asset are not reliably measurable or exchange transaction lacks commercial substance, then the cost price of PP acquired will be equal to carrying amount of asset given up plus minus cash adjustment. Similar point we have done where? AS10. Chalega? Yes, sir. Then acquired in exchange for shares or any other securities. So if intangible asset is acquired in exchange of any shares or any other securities, for example, you purchase intangible asset and you have issued equity shares of your company. For this, AS10 is silent. Means AS10 has not given such point. Means if you have read, last revision was for AS10. We have not done that point in AS10, but this point is given under AS26. 6. Are you getting what I am saying? So what AS26 says that cost price of intangible asset acquired will be equal to fair value of asset received or fair value of securities issued, whichever is clearly evident. So fair value of asset received or fair value of securities issued, whichever is clearly evident. So either of that information will be given the question that you use. However, first preference will be given to what? Fair value of asset received. Chalega? Yes, sir. Then acquisition as a part of amalgamation chapter. So amalgamation chapter now we have done. Correct now. So whenever we have acquired any intangible asset in amalgamation chapter, so that intangible asset will be recognized at fair value. Other than goodwill, goodwill will be always balancing figure. Goodwill will be always balancing figure. So now we know that as per AS 14, amalgamation are of two types. Amalgamation in the nature of merger, amalgamation in the nature of purchase. If amalgamation in the nature of purchase, then any intangible asset acquired apart from goodwill will be recognized at fair value. In amalgamation in the nature of merger, any intangible asset acquired will be recorded at book value. Simple. That is only given. Correct now. So any intangible asset acquired in an amalgamation in the nature of purchase is accounted for in accordance with AS 14 they have given. So we know AS 14 now. Chalega. Acquired through government grant. So this will be as per AS 12. So if you have received any intangible asset free of cost, so it will be recognized at nominal value. If it is received at concessional value, then at concessional rate. Correct now. Same thing we have done under AS 12. So this is basically as per AS 12. Understood? Correct. The next point is internally generated goodwill. So we have understood that any internally generated goodwill will not be recognized. Why? Because can I say it is what? The cost cannot be measured reliably. So it will not meet recognition criteria. Not only internally generated goodwill, there can be some other internally generated intangible asset which may not meet the recognition condition, then that will also not be recognized. For example, self-generated trademark, self-generated patent, self-generated whatever. Correct now. Self-generated trademark, copyright. So it is quite possible that cost cannot be measured reliably. That in that case, that will be also not recognized as an intangible asset. But there are some internally generated intangible assets for which cost can be measured reliably. Then so it will be recognized. So if there are some intangible assets for which cost can be measured reliably, so what AS26 says that for recognition of intangible assets there are two phases: research phase and development phase. So research phase and development phase. So what AS26 says that any expenditure incurred during research phase will be charged to profit and loss account as an expense immediately, without thinking anything, without applying any point, just charge entire expenses to profit and loss account as an expense. Correct. However, any expenditure incurred during development phase, that expenditure can be recognized as an intangible asset if it satisfies how many conditions? 6 conditions. How many conditions? 6 conditions. Correct. So recognize as an intangible asset if and only if entity can demonstrate all the following conditions. Understood? How many conditions? 6 conditions. Out of the 6 conditions, the first 5 is nothing but for the probable future economic benefit, and last is for what? Cost. The first condition, this you need to memorize. So can you repeat with me? First is what? The technical feasibility of completing. There must be technical feasibility of completing the intangible asset. There must be intention to complete the intangible asset. There must be ability to use or sell such intangible asset. There must be existence of the market for the output of intangible asset or the intangible asset itself. There must be availability of adequate technical, financial or other resources, and the last is ability to measure the expenditure reliably. Can you repeat once again? First is what? Technical feasibility of completing the intangible asset. Second, intention to complete the intangible asset. Third, ability to use or sell intangible asset. Fourth, existence of market. The last one is what? Availability of adequate technical and financial resources. Last, the ability to measure the expenditure reliably. Chalega? Yes, sir. So can you say once these 6 conditions satisfied, from that date we can recognize intangible asset? Means can I say till that date any expenditure incurred during development phase will be also charged to profit and loss account as an expense. Means what they want to say, just try to understand. This is very important from exam point of view also. A question can be asked. They will give you what? First research phase, then they will give you development phase. This is the research phase, this is the development phase. So any expenditure during research phase will be charged to profit and loss account as a expense. Then they will say that at this point of time 6 conditions will be satisfied. Correct? At this point of time 6 conditions will be satisfied. So during this period, whatever expenditure incurred, that will be also charged to profit and loss account as an expense. And we can capitalize only what? This expenditure. So this expenditure will be capitalized as an intangible asset. So this will become the carrying amount of intangible asset. At year end, this will become carrying. This amount will become carrying amount of intangible asset at year end. Correct. Now, till now we have not done AS 28, but we have done AS 28 in our class, but revision not done. But you know AS 28 now that impairment loss need to be also calculated. So for this type of intangible asset which are not yet available for use, correct, now we'll do annual impairment testing. We'll do annual impairment testing irrespective of indicator. Irrespective of indicator. So of course in exam they will give you recoverable amount also. Recoverable amount. So suppose this is 1000 and they have given recoverable amount 900. So what is the impairment loss? This 100 will be charged to PL as an expense immediately. Now you know how to calculate recoverable amount. As per AS 28, recoverable amount will be equal to value in use or net selling price, whichever is higher. Very good. Whichever is higher. So it is quite possible they may give you some information to calculate value in use. They may give you cash flow. So you are expert in calculating the discounted value of cash flow, that will become what? Value in use. Then compare with carrying amount. The difference will be what? Impairment loss. So this can be one of the popular question which may be asked in exam. Chalega? Yes sir. Understood. Correct. That is only given. The cost of internally generated intangible asset is the sum of expenditure incurred from the time when the intangible asset first meet the recognition criteria. Correct. Means can I say in this way ki any intangible asset, any asset which do not meet the definition of intangible asset or recognition criteria of intangible asset will be charged to profit and loss account as an expense. Will be charged to profit and loss account as an expense. Correct. What they said, any expenditure on intangible item should be recognized as an expense if it does not meet the definition as well as recognition criteria. Definition or recognition criteria. Understood? Have you understood? Such example means examples of such expenditure are given. This may be important from exam point of view. In MCQ this type of question can be asked. The expenditure on startup activities. Startup means if you are starting any company, so you need to incur some preliminary expenses. So all the preliminary expenses will be now charged to profit and loss account as a expense immediately. Means it cannot be deferred. It cannot be deferred. It cannot be deferred. Understood what I am saying? So preliminary expenses incurred in establishing a legal entity such as legal and secretarial cost. Expenditure to open a new facility or business means any pre-opening cost. Expenditure to open a new facility, that will not be capitalized. That will not be capitalized. Expenditure for commencing new operation or launching new product. For example, any pre-operating cost, we can say, for example, inauguration expenses, etc. So that will not be also capitalized. If you want to launch a product, you may do some marketing expenses, etc. That will be also not capitalized. Expenditure on training activity. Expenditure on training activity will never be capitalized. So if you train your employee to inform them how to use intangible asset, the training expense will never be capitalized. Expenditure on advertising, promotional activity, this will also not be capitalized. Last, expenditure on relocating or reorganizing part or all of an entity will not be capitalized. Means relocation cost, reorganization cost, same point is given under AS 10 also, will never be capitalized. Understood? Correct? Yes sir. Correct. Now they have given clarification that this type of question can be asked. Suppose this is the development phase. This is development phase, correct? And 6 condition was satisfied. Means this is year end 31st March. And 6 condition was satisfied at this point of time. Before that 10 lakh expenditure has been incurred, but during the year management have understood the development phase recognition criteria has been satisfied. Correct. So whether such expenses can be now recognized as an intangible asset? No. So any past expenses which has been any past expenditure which has been recognized as an expense cannot be reversed and cannot be recognized as a intangible asset. So that clarification has been given. Keep expenditure on an intangible item that was initially recognized as an expense in the previous annual financial statement should not be recognized as a part of the cost of intangible asset at a later date, even though recognition criteria is satisfied at a later date. Understood? Yes, sir. Subsequent expenditure in any expenditure done can be capitalized if it is probable that expenditure will enable the asset to generate future economic benefit in excess of its originally asset standard, or the expenditure can be measured reliably. However, this point is not so much important from examination point of view, because for intangible asset normally we don't do any subsequent expenditure, but if you have done and that these two conditions are satisfied, then it will be also capitalized. Understood? Then measurement subsequent to initial recognition. So AS10 has given two model, cost model, revaluation model, but AS26 do not permit revaluation model, only one model, cost model. Cost model you have understood, cost price less accumulated amortization less accumulated impairment loss. The difference is what AS10 has given two model, cost model, revaluation model. AS26 do not permit revaluation model. Chalega? Yes, sir. Now coming to amortization, ki how to perform amortization. Impairment loss will be covered under AS28. Chalega? Yes, sir. So what about amortization? So amortization will be similar to depreciation. All the points will be similar to depreciation. Only few points there are some changes. Let us discuss that point. Correct. So what they say ki same thing. The depreciable amount of an intangible asset should be allocated on a systematic basis over the useful life of the intangible asset. Treatment, it will be charged to profit and loss account as an expense unless it can be capitalized as per the requirement of other accounting standard. So any amortization of intangible asset can be added to the cost price of inventory as per AS2. Any depreciation of PP can be also added to the cost price of inventory as per AS2 or as per AS10. So it can be capitalized as per the requirement of other accounting standard. If that other accounting standard do not permit capitalization, so always amortization and depreciation will be charged to profit and loss account as a expense. Chalega? Yes, sir. Amortization period. Amortization period. So of course the amortization period will commence from a date when the asset is available for use. Available for use means what? Ready for use. Correct? Yes. Okay, sir. Now there is one rebutable assumption as per the useful life of the asset is concerned. What do you mean by rebutable assumption? The assumption without any logic. So one rebutable assumption has been taken that useful life of any intangible asset does not exceed 10 years unless longer life is justified. Means from examination point of view, if the useful life of intangible asset is not given, you will take how many years? 10 years. But if they have given 7 years, 7 years. If they have given 12 years, no. 10 years unless there is a justification of 12 years. Means of course the question will provide that there is some justification of 12 years, then only you can take 12 years, otherwise you can't take 12 years. So they have said useful life is 12, management has taken 12 years. So as per AS26 it should not exceed 10 years unless it is justified, So this is what? A rebutable presumption. A rebutable presumption. Correct. But one clarification कि goodwill is not covered यहाँ पर. Goodwill amortization is based on AS14. Goodwill amortization is based on AS14, and AS14 says that useful life should not exceed more than 5 years. So be careful. Goodwill is what? 5 years. Other intangible asset 10 years. Have you understood this point? Goodwill 5 years. Other intangible asset 10 years. Chalega? Yes, sir. Now depreciable amount will be cost minus residual value. Cost minus residual value. So what AS26 says that the residual value of intangible asset will be always assumed to be 0 unless there is an active market. Means you can estimate a residual value. So we can estimate a residual value only when there is an active market. So if there is an active market, then we can estimate a residual value, or there is a commitment by the third party to purchase such intangible asset at the end of useful life. Correct? So if that is possible, then we can estimate a residual value. Otherwise, residual value will be always assumed to be 0. Understood? Then amortization method, similar point is given in AS10. There are 3 amortization methods: SLM, RBM and production unit method. And can I say we need to do review of useful life, amortization method and residual value at the end of each financial year. At the end of each financial year, and any changes will be accounted as per AS5. However, AS10, just try to understand. I have said that AS10 is revised accounting standard, but when AS10 was revised, AS26 was not revised. Means AS26 is old accounting standard which is not yet revised. Now after AS10 revision, changes in useful life is an accounting estimate. Here also changes in useful life will be an accounting estimate. Changes in residual value will be an accounting estimate. Here also changes in residual value will be an accounting estimate. But as per old AS10, depreciation method was an accounting policy, but as per revised AS10 it is an accounting estimate. So when it was revised, it was not revised. So as per AS26, any changes in amortization method will be accounting policy. Changes in accounting policy. I don't know whether this type of question they will ask or not, but if they ask, as per AS26, this is what changes in accounting policy. But correct is what? Changes in accounting estimate, because depreciation method is also what? An accounting estimate which is based on estimated future economic benefit, So will not fight for this. However, this type of question they will not ask, I think so. They will not ask in examination. They will normally ask this or this. Understood? Have you understood this point? Yes, sir. Then impairment loss. The impairment loss will be covered under AS28. However, AS26 has given that following intangible asset should be annually tested without indicator, irrespective of indicator. Means if you have done AS28, there we have done that impairment testing will be done only when there is a indication. But for some type of intangible asset, we will perform annual impairment testing irrespective of indicator. So annual impairment testing irrespective of indicator, at least at the end of each financial year, even though there is no indication for 2 type of intangible asset. An intangible asset that is not yet available for use, means during development phase. Now correct, this point only I was explaining यहाँ पर, when I have explained here ना कि during development phase will do annual impairment testing irrespective of indicator. So this type of question is very important from exam point of view. So any intangible asset which is under development phase require annual impairment testing irrespective of indicator. Correct. And any intangible asset that is amortized for a period exceeding 10 years from the date when the asset is available for use. So if you have taken useful life of more than what? 10 years, then also annual impairment test will be done irrespective of indicator. So if you have estimated useful life is more than 10 years, then for that asset also will perform annual impairment testing irrespective of indicator. So this might be important for MCQ. Chalega. Retirement nothing is there. It means as per AS10, whenever asset is retired, so it will be valued at what? Carrying amount or NRB, whichever is lower. But for intangible asset, they said at its carrying amount only. Means will not compare with NRB. It will be carried at carrying amount. Means no gain or loss will be recognized. Chalega. Derecognition is similar to what we have done for AS10. Here an intangible asset should be derecognized. on disposal or when no future economic benefit are expected from it. No future economic benefit are expected from it. How to calculate gain or loss on derecognition? We'll compare sale proceed, then deduct cost of disposal. This will become net sale proceed. From that will minus carrying amount of intangible assets sold. The difference will be gain or loss on derecognition, which will be transferred to PL. चलेगा. Then last point of this chapter before disclosure, AS 26 should be applied for all intangible assets except following. So can you say now due to MCQ question they may ask this type of question also, AS 26 is not applicable to A, B, C, D. They will give 4 options. One option will be wrong. Then you need to, whatever the option has been given, you need to choose from that. Correct now. So intangible assets that are covered by another accounting standard. So any intangible assets which are covered by other accounting standard will be not covered यहाँ पर. Correct now. Understood. For example, intangible asset held by entity for sale in the ordinary course of business, so that become inventory. So if suppose you are doing trading of software, so software is held for sale. So even though it meet a definition of intangible asset, it is an inventory and that is covered where? Under AS2. Deferred tax asset ke DTA, now you know deferred tax asset, that is also intangible but that is covered under AS22. Lease that fall within the scope of AS19, for example you have taken lease any intangible asset on lease, then AS19 is applicable. Goodwill arising on an amalgamation, so goodwill is covered under AS14 and AS21 consolidation chapter. So goodwill arising on amalgamation and arising on consolidation is also not covered under AS26. So this is very good question. They will ask goodwill is covered under which AS? First will be AS26, then AS14, AS21, then they will say B and C both. So which is correct? Most of the student will say AS26. Intangible asset na? So it is quite possible. Understood, to be careful. It is also not covered for financial asset. Financial asset means what? Any receivable etc. So of course can I say for debtor etc. AS26 is not applicable. Correct? It is also not applicable to any mineral right and expenditure on exploration or evaluation of such asset. For that there is no accounting standard till now. So for any mineral right for exploration and evaluation of mineral resources etc. no accounting standard is there and AS26 is not applicable. Correct? It is also not applicable to intangible asset arising in insurance entity from contract from policy holders. Means any intangible asset arising for insurance company. So that is also not covered यहाँ पर, and for that also there is no accounting standard till now. Expenditure in respect of termination benefit. Termination benefit now it is covered under AS15. So if you have paid some termination compensation on termination of employee, that is covered under AS15, is not covered under AS26. Understood? Disclosure you can read by row. चलेगा. With this AS26 is over. AS26 is over. Correct? Understood? Simple. Can we take one more? Accounting standard? Yes sir. So come to, we'll take AS60. Borrowing cost. Come to borrowing cost. AS60. What do you mean by borrowing cost? Borrowing cost means interest cost or any other cost in connection with borrowing of fund. Correct? In connection with borrowing means, can I say any cost of equity is not borrowing cost? So any cost to equity will not be covered in this chapter. So borrowing cost does not include any actual or imputed cost of owner capital, that is equity and preference share capital. Correct? Borrowing costs include what? So borrowing costs include interest and commitment charges on borrowing, amortization of discount on issue of debentures of bond, amortization of premium on redemption of redemption of debentures of bond, amortization of any ancillary cost. Ancillary cost means related cost, for example underwriting commission. So amortization of underwriting commission incurred in connection with borrowing. You know about underwriting commission? Correct. So any brokerage paid, etc., that will be ancillary cost. Then last point is exchange difference arising from foreign currency borrowing to the extent it is regarded as an adjustment to interest cost. I hope this also you remember. This again I will discuss at the end of the chapter. So this you also be silent. Come to this all. This all have you understood? For example, just try to understand. If I say here debenture of rupees 10 lakh has been issued at a discount of 10%, which is redeemable at a premium of 20%. Rate of interest after 3 years. After 3 years, rate of interest is 12%. Underwriting commission paid is 5% of issue price. 5% of issue price. Understood? Correct. So what journal entry will do? Batao. On the date of issue, what journal entry will do? First journal entry will what? Bank account debit how much? 9 lakh. Discount on issue of debenture 1 lakh. To debenture 10 lakh. Understood? Any more journal entry? Can I say premium which is payable on redemption? That is also one contractual obligation. Means there is an obligation to pay premium. So if there is an obligation to pay premium, correct now, we should create a liability for that. We should create a liability for that. So we will also recognize one loss. We call it what? We call it loss on issue of debenture. So this is known as loss on issue of debenture account debit 2 lakh. To what? Basically we open one account premium payable. Premium payable how much? 2 lakh. So total liability become how much? 12 lakh now. Total liability is 12 lakh. And one more journal entry we have done underwriting commission account debit to what? Bank. That is 5% of issue price. So issue price was 9 lakh. 9 lakh ka 5%. 45,000. So 45,000 will be underwriting commission. 45,000 will be underwriting commission. Correct. So this all journal entry we have done on the date of contract. For example, this was issued on 1/4/2023. So all journal entry we have done at 1/4/2023. Now on 31st March 2025, we'll also recognize interest expense account debit to what? Bank. Suppose paid. Correct. So interest expense will be 12% of what? 12% of 10 lakh. That is 1,20,000. 1,20,000. And can this journal entry be done for 3 years? So 31st March 2025, 26, same entry. 31st March 2027, same journal entry. And then we'll do repayment. Repayment will be what? Debentures account debit 10 lakh. Premium payable 2 lakh. Bank how much? 12 lakh. Understood? But during this 3 years, you can see what were the expenses incurred. Samajh year 1, year 2, year 3 na. What was the interest cost? 1,20,000, 1,20,000, 1,20,000. And there was some other cost. Other cost was how much? But the discount 1 lakh, premium payable 2 lakh, Underwriting commission how much? So it is 3,45,000. Total is what? 3,45,000. This total is what? 3,60,000. So this 3,60,000 has been incurred in how many years? This 3,45,000 is also incurred for how many years? So this will be amortized for how many years? 3 years. Correct now. However, there is no accounting standard for this. There is no accounting standard for amortization of this. Means AS16 says that this will be considered as borrowing cost, whatever you have amortized. But how to amortize, that is not given in any accounting standard. Are you able to understand what I am saying? So can you see, because there is no accounting standard, now it depends upon management judgment. Means as per the information given in the question. As per the information given in the question, normally we, from examination point of view, we divide equally in how many years? 3 years. From examination point of view, so if question is silent, we'll divide 3,45,000 divide by 3, how much? 1,15,000. 1,15,000. 1,15,000. So what is the borrowing cost of first year? This total become borrowing cost now. So now you will understand what I want to say. You will be able to understand. The borrowing costs include interest charges, amortization of discount, amortization of premium, amortization of ancillary cost. Understood? Have you understood what I am saying? So now this may be important from MCQ's point of view. Therefore I am explaining. However, from practical question, means as per questions solving point of view, they give only what? Interest cost. Normally in that they don't ask what? Discount, premium, etc. Have you understood this point? But can you see, that should be also added to interest cost, and that total will become what? Borrowing cost. That total will become borrowing cost. So borrowing cost for the first year is not 1,20,000. Borrowing cost for first year is what? 1,20,000 plus 1,15,000. That is 2,35,000. This, be careful. Till now this type of question they are not giving exam, but they may give in exam. Understood? They will say a discount on issue of debenture and it is redeemable after 3 years. So the discount will be allocated in how many years? 3 years. Divide by 3, and amortization of that discount for first year will become borrowing cost of the first year. What I am saying, till now this type of question has not been given, but can be asked now. Understood this point? Correct? Have you understood this point? Yes sir. Then once you have understood what is borrowing cost, what is the borrowing cost, now the next point is that what will be the amount of capitalization? Means what amount of borrowing cost will be capitalized? What amount of borrowing cost will be capitalized? So AS16 deals with the amount of capitalization. See what amount of borrowing cost will be capitalized, and if it will not be capitalized, then it will be charged to profit and loss account as an expense. Are you getting? So AS16 does not give any point of calculation. Calculation you do as per agreement or as per the concept, whatever you have done in any chapter. But whether it will be capitalized or whether it will be charged to profit and loss account, that is given where? AS16. I hope you have understood this much. So what will be the amount of capitalization? So what AS16 says, that it will be capitalized to the cost price of asset if borrowing cost is directly attributable to the acquisition, construction or production of a qualifying asset. Construction, acquisition or production of a qualifying asset. So can you say all assets are not qualifying assets? So only those assets which are qualifying assets, only for that asset we can do capitalization. Means any asset which is not a qualifying asset, no borrowing cost capitalization. Borrowing cost cannot be capitalized. So what is the meaning of what? Qualifying asset. The qualifying asset are those assets which takes substantial period of time for getting ready for its intended use or sale. For getting ready for its intended use or sale. So substantial period of time. Now the question arises, what do you mean by substantial period of time? For that one clarification has been given, that any asset which takes more than 12 months for getting ready for its intended use or sale will be always qualifying asset. But any asset which does not take more than 12 months, it does not mean it is not a qualifying asset. It may or may not be qualifying asset depending upon the facts and circumstances of each case. Means any asset which is taking 9 months, you can't say it is not a qualifying asset. Means it will depend upon the information given the question. It depends upon the information given the question. And okay, 9 months is also substantial. For example, nowadays the flyover, flyover can be constructed in 6 months. So it does not mean it is not a qualifying asset. Use expenditures is involved, so it can be also considered as qualifying asset. So that will depend upon the information given the question. Can I say, if suppose they ask AS16 question, he calculate borrowing cost to be capitalized and the capitalization period is 9 months, what assumption you will take? It is a qualifying asset, because if you say it is not a qualifying asset, you will say answer is 0. Then why they have given 5 marks question? Understood now? However, in CA Inter they don't trouble you much regarding this point. But what I want to say, if suppose they have given 12 months, it will be always qualifying asset. But if it is less than 12 months, whatever you are doing, take assumption. Whatever you are doing, take assumption. But if it is a AS16 question, means they have asked you to calculate amount of capitalization, so always assume what? Qualifying asset only. Are you getting me? Suppose it is a question of AS10. They have asked you to find out cost price of PP, and we have taken a loan. We have taken a loan for the construction of PP, and the construction completed in 6 months. Nothing has been given about substantial period of time. So take assumption. Assumption. If it is substantial period of time, then borrowing cost will be capitalized. If it is not substantial period of time, borrowing cost will not be capitalized. Whatever assumption you are taking, write down as a note and then do calculation. Means if it is not qualifying asset, then what? No borrowing cost capitalized, nothing will be added. If it is a qualifying asset, then we need to calculate what? Borrowing cost, and that will be capitalized for that particular period. Understood this point? So that depends upon assumption. Whatever assumption you are taking, write down. However, you have understood his substantial period of time normally depends upon the facts and circumstances of each case. However, ordinarily a period of 12 months is considered as substantial period of time. What about the prime objective? Prime objective to give this particular definition, yeah, this particular explanation, that they want to exclude from definition of qualifying asset those inventories which are routinely manufactured or otherwise produced in large quantities on a repeated basis over a short period of time. So if we are doing manufacturing of inventories in large quantities on a repetitive basis means in a routine manufacturing process, there is a routine production cycle, means after every 3 months you are doing that production, means that is not based on customer requirement. Normally we do what? Manufacturing. For example, if I am doing this manufacturing this calculator, so whether I will wait for the demand, whether I will wait for the customer order, or I will do manufacturing. So once one production cycle completed, we will start another production cycle on a repetitive basis. So it is produced in large quantities on a repetitive basis for a shorter period of time. Shorter period of time, once again not defined. So once again judgment required. But can I say in this case, it will not be considered as what? Qualifying asset. But suppose if you are constructing one machinery as per the specification given by the customer, whether it is a routine manufacturing? No, it is not a routine manufacturing. Whether it is a large quantity? No, one we are doing. Correct. Now in that case, even though it is inventory, it can be a qualifying asset. It can be a qualifying asset. Chalega? Yes sir, yes sir. And second point is what? Any asset that are ready for their intended use or sale when acquired, means it is acquired and we can use it. For example, you purchase car by taking a loan. The moment you receive car, you started using it now, or you will wait? No. Correct now. You can use it immediately. So it means it is not a qualifying asset. It is not a qualifying asset. Amount is not matter in that case. Amount, you have taken loan of 2 crore because the car price was 2 crore, then also it will not be capitalized. Chalega? Yes sir. Now how to calculate amount of capitalization? So we have understood for which asset capitalization is possible. Now we need to understand what amount of borrowing cost will be capitalized. For that purpose, all the borrowing has been divided in two parts: specific borrowing and general borrowing. Specific borrowing or non-specific borrowing. So for specific borrowing, amount of capitalization will be actual borrowing cost incurred less any income from temporary investment. Income from temporary investment, you have understood that for the time being we don't require that much fund. So whatever fund which is idle, borrowing fund which is idle, we can invest it temporarily outside a business. So when you have invested outside a business, you are generating some income, interest income. So that interest income will be deducted from actual borrowing cost and that amount will be capitalized. Correct? Now actual borrowing cost incurred during which period? During capitalization period. During capitalization period. So what do you mean by capitalization period? That I will explain. Understood what I am saying? During capitalization period. Understood. So actual borrowing cost incurred during capitalization period. Can you say irrespective of expenditure incurred? Irrespective of expenditure incurred. Means whatever the amount of loan, on that loan will calculate what? On that loan will calculate what? Borrowing cost. Understood this point? For example, suppose you have taken a loan of 10 lakh. Understood? On 1/4/2023. Correct? And you started construction of qualifying asset from this date. This is the year 1 end, 31st March 2024. And right now, only suppose out of this 2 lakh expenditure has been incurred. Let us assume only 2 lakh expenditure has been incurred. Means 8 lakh has not been incurred. 8 lakh has not been incurred. And this is not invested also, not invested somewhere. Quite possible it is your policy now, whether you want to invest, whether you do not want to invest. Got it? Batao. The rate of interest is 10%. 10% you will calculate on 10 lakh to 2 lakh. Understood the question? 10% you will calculate, means for the amount of capitalization you will apply 10% on 10 lakh to 2 lakh. Answer changes. Initially you said 2 lakh. 10 lakh to 2 lakh. 10 lakh 2 lakh. But you have used how much? So you will calculate on 10 lakh or 2 lakh? 10 lakh. So on 10 lakh, if it is specific borrowing, but if it is general borrowing, then on 2 lakh. On expenditure incurred. Be careful about this part. Normally students do mistake यहाँ पर. So specific borrowing, so all the borrowing cost will be capitalized because that is for a specific purpose. And if you are not using it, it is your mistake now. So that borrowing cost is directly attributable. That borrowing cost on 10 lakh is directly attributable. But if it is for general purpose, so can I say it means 8 lakh is used for some other purpose, so that you can't capitalize. That you can't capitalize. So you can only capitalize on what? 2 lakh. Difference you have understood? So specific borrowing, it is what? Actual borrowing cost incurred irrespective of expenditure on qualifying asset. Got this point? Yes, sir. Now coming to non-specific borrowing. So for non-specific borrowing, first we'll calculate the actual borrowing cost on non-specific borrowing. Correct. Understood. Now if there are more than one non-specific borrowing, so we'll calculate what? Capitalization rate. So we'll calculate capitalization rate for non-specific borrowing, which will be equal to what? Which will be equal to actual borrowing cost on which borrowing? Non-specific borrowing divided by weighted average borrowing fund. Weighted average. Weighted average, have you understood? Means we'll give time weight. Keep for how many months, yeah, for how many days it was used throughout the year. So it will be weighted average borrowing fund. Weighted average borrowing fund. For example, suppose you have taken one loan at the beginning 10 lakh at the rate of 10%, and second loan you have taken on 1/7 of rupees 5 lakh at 12%, and third loan you have taken on 1st Jan of rupees 13 lakh at a rate of 15%. Quite possible, quite possible. And all are what? Non-specific. So what will be the capitalization rate? Batao. So first we'll calculate borrowing cost. So 10 lakh ka 10% 1 lakh. Then plus what? 5 lakh ka 12% for how many months? 9 months. So 5 lakh into 12 months, 12% na? 5 lakh into 12% into 9 by 12. How much it is coming? 45,000. Correct. Then 13 lakh ka how much percent is 15% for how many months? 3 by 12. 3 by 12. How much? 48,750. Divide by what? Batao. 10 lakh into what? 12 by 12 plus 5 lakh into 9 by 12 plus 13 lakh into it is 3 by 12. Understood the time weight? Normally this type of question they don't ask in CA inter, but can be asked. Be careful. Be careful. If question is silent, we'll assume that all the loans are outstanding from the beginning. If all the loans are outstanding from the beginning, then it is 12 by 12, 12 by 12, 12 by 12. Then you can do directly 10 lakh plus 5 lakh plus 13 lakh. In simple word, if the interest has been calculated for 9 months, so weights will be also given for 9 months. If interest has been calculated for 3 months, weights will be given for 3 months. Understood? Have you understood this point? This will become capitalization rate. Now this capitalization rate will be applied on expenditure on what? Qualifying asset. So whatever expenditure has been incurred, on that expenditure, capitalization rate will be applied. Correct? Understood? Understood. So for that purpose, AS 16 says first calculate average expenditure during the year. Suppose average expenditure is what? 10 lakh. From this, we'll first deduct how much expenditure has been done from specific borrowing. Suppose out of this expenditure has been done from specific borrowing is 2 lakh. So balance become 8 lakh expenditure which has been done from which borrowing? Non-specific. On this will apply what? Capitalization rate. Because on this too will apply actual rate as for what? Specific borrowing. Understood? Have you understood? So this can be one particular question which normally they ask in exam. Correct? Understood? I think yes sir. Can I say any borrowing cost which is not capitalized will be charged to profit or loss account as an expense? So suppose the total borrowing cost is 10 lakh. Amount of capitalization of borrowing cost is 7 lakh. So 3 lakh will be charged to profit and loss account as a expense. Okay sir? Correct. The next point is what? Commencement, suspension and cessation of capitalization. When to commence, when to suspend, when to cease capitalization of borrowing cost. When to commence, when 3 conditions are satisfied. When to commence, when 3 conditions are satisfied. This is known as commencement date. Commencement date of capitalization. So what are the 3 conditions? First, borrowing cost is being incurred. Second, expenditure on qualifying asset is also being incurred. The third, any activities that are necessary for construction, acquisition or production of a qualifying asset are undertaken, means are in progress. That activities has been undertaken. For example, some approval is required from the government and you have not taken approval. Can we start capitalization? No. So if you have taken approval or that approval is under process, it means you can what? Start capitalization. Activities must be in progress. Activities must be in progress. Now these activities may be either technical activities or any administrative activities. Any technical activities or any administrative activities. Have you understood this point? Correct. So if all these 3 conditions satisfied, at that point of time will start what? From that point of time will start borrowing cost capitalization. Means, can I say in this way? Suppose this is the date of loan. And your construction started from this date. Construction or acquisition started from this date. Correct. So this become the date of commencement. Will commence from this date now. Means for this period, interest will be charged to PL. He capitalized. So it will be charged to PL. Even though it is specific borrowing. Correct. And will start commencement of capitalization from this date. This date. Understood? So you have understood what commencement date. Next point is what? When to suspend. Suspend means what? When, no, not stop. Temporary stop. Temporary stop. I have suspended you from class. Not permanently, na. That is what? Have you been suspended from school? Never. When you are a good student. Never ever. Not at all suspended. Huh? I have been suspended many times. Then also I become CA. Correct na? So can I CA does not become, CA does not mean what was your past performance. What was your performance when you are doing CA, that is more important. Correct na? So even though your past was what average, but right now you are doing with full dedication, you can become CA. So past performance does not mean you will become CA or you will not become CA. Chalega? Yes sir. So when to suspend, what they said, if the active development is interrupted, if the development is interrupted due to some unnecessary reason, then we will suspend it temporarily. So active development is interrupted due to some unnecessary activities. Unnecessary activities means which was avoidable but was not avoided. Because of that reason, we need to stop the production, acquisition or construction activities. Are you getting? So then in that case we will suspend what? Borrowing cost capitalization. For example, can I say fire occurred? We will stop construction activity. So that was unnecessary activities. Unnecessary activities. I hope you are understanding. Correct? Chalega. Labor strike. Labor strike. Legal case was pending. Some suit was filed. Legal case was filed. And because that reason we need to stop production activity or construction activity. So that become unnecessary activity. But can I say in this way, if the active development is interrupted due to necessary activities, means which was necessary for the construction, acquisition or production of a qualifying asset, then will not suspend capitalization. Then will not suspend capitalization. So if any development is interrupted due to necessary activities, then will not suspend capitalization. Understood? Correct? Yes sir. So active development is interrupted due to what? Unnecessary activities. Okay. Last, when to cease? When substantially all the activities which are necessary to prepare the asset has been completed, then we'll cease capitalization. When substantially all the activities necessary to prepare the qualifying asset for its intended use or sale are complete, then we'll cease capitalization. Then there is one note given. Sometime what happens, we do construction part wise, means part 1, part 2, part 3. For example, we are doing construction of 3 buildings. Building 1, building 2, building 3, and we have taken one loan. Correct? Now building 1 is completed. Can we cease capitalization for building 1? Yes, if it can be sold or used separately, then we can we can cease the capitalization of borrowing cost for building 1. But if it cannot be sold, if it cannot be used separately, then we cannot cease capitalization. This is also very important point. I think one question also is there in ICAI study material. When the construction of qualifying asset is completed in part and the completed part is capable of being used while construction continues for other part, capitalization of borrowing cost in relation to that part should cease when substantially all the activities necessary to prepare that part is complete. Okay. Chalega. So the last point is what? Exchange difference. Exchange difference. This I need to explain. Suppose you have taken one foreign currency borrowing. Which borrowing? Now, so you know foreign currency borrowing is a monetary item, non-monetary item. So it is a foreign currency monetary item. Means I am giving reference of which AS? Means I am going to AS 11. Now AS 11 says that any exchange difference on foreign currency borrowing will be charged to PL or will be capitalized. Will be charged to PL. Will be charged to PL. Understood. This is as per AS 11. But what AS 23 says that if there is any foreign currency borrowing. Understood. Suppose you have taken $10,000 at a rate of interest of 4%. And when you have taken loan, it was $1 is equal to 80. Understood? Similar loan was available in Indian market. Means reporting currency या local currency borrowing. That was available at 12%. At 12%. Okay. So it means how much borrowing cost यहाँ पर? It is 10,000 into 4% into, correct, into, normally for income and expense we apply average rate. Now you know AS 11, huh? So for income and expense normally we apply average rate. Suppose average rate is given 85, yeah 82 कर लो, 82. So can you say this will be multiplied by what? 82. Are you getting what I am saying? Have you understood? So 10,000, or if nothing is given, then we can apply closing rate also, if average rate is not given. So 10,000 into 4% into what? 82. How much? It becomes 32,800. But if the loan would have been taken in what? Indian currency, what would be my borrowing cost? Borrowing cost would have been 10,000 into 80 into 12%. How much? 96,000. Can you say because you have taken foreign currency borrowing, there will be one exchange loss also. Exchange loss will be 10,000 into, let us assume at year end it become 85. Let us assume. So into 5 will do, so this become 50,000. This become 50,000. Correct. So total become how much? 62,800. Now point is what? This is always covered in AS 16. We are not discussing about AS 32,800. We are discussing about exchange difference. So what AS 16 says that this exchange difference either can be covered in AS 16 or it can be covered in AS 11. So how much is covered in AS 16 that we are discussing? So this amount will be lower of what? Lower of A and B. It will be lower of A and B. So lower means what? Actual exchange loss. How much? And the difference between these two interests. So how much? 96,600. Sorry, 96,000. 96,000 minus 32,800. How much is coming? 63,200. Lower is what? Therefore, entire exchange difference will be covered in AS 16 and nothing will be covered in AS 11. And once it is covered in AS 16, so it may be capitalized. It may, I am saying, it may be capitalized if it is incurred for what? Qualifying asset. But if it is in AS 11, then it will not be capitalized. It will not be capitalized. I hope you understood whatever I am saying. Got this point? If suppose this is what? 9. मान लेते हैं 9 मान लो. So this become 90,000. Then the lower will be different. Now lower is what? This is 90,000 and this is what? 63,200. Then lower is this. Then this much will be capitalized. So out of this 90,000, how much will be covered in AS 16? 63,200. How much will be covered in AS 11? 26,800. So they will ask you this: how much will be covered in AS 16? How much will be covered in AS 11? Understood this point? This can be one possible question in exam. Either it can be asked in the form of MCQs or it can be asked in the form of entire question. Got this point? Correct? Understood this point? Yes. Now, so what they are saying? If there is any exchange loss, lower of the following is treated as a part of borrowing cost. Actual exchange loss or the difference between interest on local currency borrowing and interest on foreign currency borrowing. Note, the exchange difference, if any, will be covered under AS11 and charged to profit and loss account. But suppose there is an exchange gain, so gain will not be adjusted. Gain will be entirely covered in AS11. So exchange gain will not be adjusted with borrowing cost. That will be entirely covered in AS11. Therefore, it will be always credited toward profit and loss account. Chalega? Yes, sir. Disclosure requirement is very easy. Accounting policy adopted and amount of borrowing cost capitalized need to be disclosed. AS16 done. Correct? Down. Okay, sir. Now we'll take one more AS. Can we take AS28? AS28. Chalo. Let us come to AS28, impairment of asset. Now when I say AS28 impairment of asset, to which asset? Not all asset. All asset is not covered in this chapter, so only few assets are covered. What are the assets? PP, intangible asset, investment property, and what? Any asset acquired under finance lease. So any asset which you have acquired under finance lease. Now you know finance lease also. So whenever asset acquired under finance lease, so asset will be recognized in the books of lessee or lessor. If you have acquired any asset under finance lease, so asset will be recognized in the books of lessee or lessor. Lessee. So asset acquired under finance lease in the books of lessee, na? In the books of lessee. So only AS20 is applicable to these assets. Means any other asset which are not these assets is outside the scope of this chapter. Means what are the assets which are outside the scope of this chapter? Inventories, any asset arising from construction contract, financial asset means receivable or any investment other than investment property, deferred tax asset, these are not covered in these chapters. Chalega? Yes, sir. Now what AS28 says that if at the end of balance sheet date, means if there is any indicator for impairment, then at the end of the year we'll perform impairment testing. It means that this chapter will start only because of indicator. If there is no indicator, this chapter will not start. So there must be indication of impairment. So what is that indication? So first let us come to indicator of impairment. So they have given some external indicators. There are some internal indicators. External indicator means information from outside the company. Internal indicator means information within the company. So external indicator means what? Asset market value has declined significantly. Asset market value has declined significantly. It may be one of the indicator. Significant changes with an adverse. Adverse means negative effect. Significant changes with the adverse effect on the entity have taken place either in the technology or in the market or in the economic or in the legal environment. Okay? Legal environment means suppose government has announced restriction on that industry. So it means indicator of what? Adverse effect on what? Entity. Understood? Correct. Market condition means suppose there is now recession in the market. COVID-19 came, lockdown happened, recession in the market. So this also may be one indicator. This may be also one of the indicators. Correct. Market interest rate have increased during the period. Can you say whenever rate of interest will increase, so present value will decrease? Now so you become expert in F. This time will have money. So if the rate of interest will increase, the present value will decrease. So value in use will be now lower. So this might be an indicator of impairment of the asset. Correct. The carrying amount of the net asset. The carrying amount means book value of net asset. Net asset means total asset minus total liability is more than the market capitalization. Means the market value of equity shares. Market value of equity share is less than what? Carrying amount of net asset. It means assets are overvalued. So if assets are overvalued, it might be a case of indicator of impairment. Correct. So these are what? External source of indicator. Internal means what? Obsolescence of physical damage of asset. Asset is physically destroyed by fire, etc. Or there is any significant changes with an adverse effect on the entity has taken place. For example, they have decided to discontinue the one business. Correct now. Decided to restructure the operation. So this might be indication that something has happened. Why will do restructuring? Something has happened, then only we'll go for restructuring now. So this might be an indication. The last point, economic performance of the asset is worse than expected. Means the performance of asset is not good. Performance of the asset is not good. These are some indicators. This might be important once again for MCQs. But we have understood that whenever entity has done assessment at each balance sheet date, whether there is an indication that asset might be impaired, if such indication exists, entity should estimate what? Recoverable amount of asset. Means will estimate recoverable amount only when there is a indicator. If there is no indicator, there is no need to estimate recoverable amount. So what do you mean by recoverable amount? Recoverable amount means higher of. Recoverable amount means what? Higher of net selling price and value in use. Be careful. Higher of net selling price or value in use. Now from exam point of view, I'm teaching you from exam point of view. That much detailed discussion is not required. So net selling price means what? That will be given the question. Net selling price means given the question, or it can be expected selling price minus expected selling expense. But normally in this chapter they will give NSP. Value in use, they will give you cash flow. They will give you discount rate. Can you find out present value of future cash flow? So present value of future cash flow will be value in use, but be careful. You need to also add present value of disposal value of such asset at the end of useful life. Correct. So it will be present value of cash flow to be generated from the use of asset plus present value of residual value or disposal value at the end of useful life. Can you calculate that? After calculation, whichever is higher, that will become recoverable amount. Recoverable amount compared with carrying amount. If recoverable amount is less than carrying amount, the difference is what? Reduction. The reduction will be impairment loss, will be charged to profit and loss account. If the asset is not revalued asset. Understood? I am coming to accounting treatment. This much have you understood or not? So from exam point of view, only this much is relevant. The formula is what? Impairment loss is equal to recoverable amount minus carrying amount. उल्टा कर लो अरे ठीक है ना. Carrying amount minus recoverable amount. Okay sir, this is the formula. If carrying amount is not given, you can calculate carrying amount. Now one doubt will come, whether a revalued asset require impairment testing. Understand the question? Suppose for PP you opted for revaluation model. So already you have done revaluation. Now revaluation will include upward revaluation as well as downward revaluation. Downward revaluation is nothing but loss only. So if you have done downward revaluation, whether it require again impairment testing? Yes. Means here it will be both. Means AS28 is applicable for both cost model and revaluation model. Means any asset which is already revalued also require what? Impairment testing if there is an indicator. Just try to understand. Revaluation is done at fair value. But impairment testing is done at recoverable amount, and both are different. Understood? Correct. And recoverable amount may be, it is NSP or value in use, whichever is higher. Understood? So therefore, even though asset is revalued, it may be further impaired because recoverable amount can be different in what? Fair value. Are you getting what I am saying? For example, carrying amount is what? 100. Fair value is what? 80. And recoverable amount is 70. But what is revaluation loss? And what is impairment loss? So first you will do revaluation ki impairment? First revaluation, because first we will calculate carrying amount as per AS10. Understood? Then we'll do impairment testing. Understood? So this become your revaluation loss, this become your impairment loss. If suppose this is the case, the carrying amount is 100, fair value is 80 and recoverable amount is what? 90. Then what is the revaluation loss? And what is the impairment loss? Nothing. Then there is nothing. But it also requires impairment testing or not if there is an indicator. Yes. Got this point? Okay, the accounting treatment is also different. The revaluation loss is adjusted with PP account. Revaluation gain or revaluation adjusted with PP account, but impairment loss we pass journal entry impairment loss to accumulated impairment loss. It is as simple as accumulated depreciation. Correct? It means how to calculate carrying amount. Carrying amount means what? Historical cost or revalued price. As the case may be na. Historical cost means which model? Revalued price means which model? Are you getting what I am saying? Then less accumulated depreciation or amortization, less accumulated impairment loss. Okay, this depreciation will be up to the date of impairment, means including current year, but impairment loss will be up to last year, means it might be second year impairment loss, third year impairment testing. Correct now? So normally they don't give this type of point in exam. Normally they give first time impairment loss in exam. It is first time impairment testing, so impairment loss will be 0 only. Because means what I want to say, just try to understand. Suppose this is the first year, cost price 100, useful life 10. So the depreciation is how much? 10. And you calculated impairment loss 5. So what is the carrying amount? Carrying amount become cost price how much? Less accumulated depreciation how much? Less accumulated impairment loss how much? 5. So this become how much? 85. Now in second year again you are doing impairment testing na. So if second year you are doing impairment testing, so you will again calculate depreciation on 85. 85 divided by 9 हो जाएगा. So it is 9.44. So now depreciation is what? 9.44. So now for performing impairment testing, what is the carrying amount? But the cost price how much? Accumulated depreciation how much? 19.4, including current year depreciation, minus accumulated impairment loss how much? 5. So this become what? So can you say accumulated depreciation will include current year depreciation, but accumulated impairment loss will not include current year impairment loss, because that too we are calculating. Now. However, normally they ask first testing only in exam. So if it is first time impairment testing, so accumulated impairment loss will be 0 only. Normally in exam they ask what? First time impairment testing. Second time impairment testing, so of course there will be some accumulated impairment loss. Are you getting what I am saying? Correct. So that I just want to inform you. I don't know what type of question they will create. So you should know each and every point. Yes, sir. Okay, sir. Okay. This also you have understood. Now NSP, this you can read from your point of view. This is not so much important from examination point of view. Value news, this we have understood. Whatever not important I am not discussing, because I know this type of particular point will not be important from exam point of view. However, this point thoda sa I'll just explain. The estimate of future cash flow will exclude. This might be important for MCQ. Now when you do estimation of future cash flow for calculation of value news, so what they want to say, this future cash flow should not include, should exclude any cash flow which is arising from future capital expenditure. Why? Because impairment should be done based on current conditions. Okay, if in future you do capital expenditure and if you consider the cash flow arising from that capital expenditure, then the no asset will be impaired. So you should ignore the cash flow which is arising from future capital expenditure. So that effect should be ignored. That effect should be ignored. Correct. Second, any cash flow arising from future restructuring. You know restructuring? Where we have done restructuring? Where we have done restructuring? No, no, no. In AS. In AS. AS 29. Restructuring. When to create provision for restructuring? When the entity is committed for that. Remember, committed for that. Two conditions were there. Entity has made detailed formal plan and has made announcement of such plan. Remember? Don't remember, do it. Okay, correct. So what I am saying, I will come to AS 29 also. So can you say whenever there is a restructuring and entity is committed for that, it means we have already created provision for that as per AS 29. So what AS 28 is saying that any cash flow which is arising from future restructuring will not be considered if the entity is not committed for that. Is committed for that, then that will be considered. That will be considered. One second. This is only important for MCQs. Only important for MCQs. Correct. One second. Future cash flow that are expected to arise from future restructuring. Future cash flow that are expected to arise from future restructuring to which entity is not yet committed, but will be included, will not be included, will not be included. If I say in this way, future cash flow that are expected to arise from future restructuring for which entity is committed will be included, will not be included, will be included. Only just remember this much. Future cash flow that are expected to arise from future capital expenditure will not be included. Understood? Any cash flow arising from financing activities will not be included. Any cash flow which is resulting from income tax received or refund will not be included. The income tax received or refund or payment will not be considered. Means you need to calculate cash flow before income tax. Cash flow before income tax. Cash flow before income tax. Understood? Therefore, can I say discount rate should be pre-tax to post-tax? It should be always pre-tax. It should be always pre-tax. It can be either weighted average cost of capital. Now, so you know weighted average cost of capital with FM. Or it can be incremental borrowing rate. However, this rate will be given the question. Nothing to fight for this particular point. Chalega? Understood? Yes, sir. Correct? Now, recognition of impairment loss for an individual asset. So you have understood how to calculate impairment loss. How to calculate impairment loss. So what will be the accounting treatment? Impairment loss. If it is for non-revalued asset, understood? Then impairment loss will be charged to PL. But if it is for revalued asset, then so first it will be debited to revaluation surplus to the extent available. Balance will be debited to, understood, to impairment loss. Means first generate is impairment loss to accumulated impairment loss. You think how it has been created. Or directly if you want to write down, it is what asset. Understood? Compound journal entry. Okay, sir? Correct? Understood this point? Yes, sir. Correct. This also you have understood. Correct. Now, coming to cash generating unit. Cash generating unit. But from my point of view, they will not ask any question on CGU. If they will ask question up to this level only. Correct? In this, I'll just like to take one question. I like to take one question. Sir, write down one question. Just write down one question. Suppose on 1/4/2020 you purchase an asset of rupees 10 lakh. Useful life is equal to 10 year. Useful life is equal to 10 year. Residual value is equal to 2 lakh and SLM. Now at Y3. Y3 means what? Beginning of year 2. Okay. क्या एक काम कर लो, beginning of year 3 कर दो. At beginning of year 3, asset was revalued upward by rupees 4 lakh. Now residual value re-estimated at 2,50,000 and remaining useful life is 8 years. चलेगा? Understood? Then there was some indicator of impairment after 2 years. Indication and recoverable amount as on this date is 6 lakh. Understood? Now, entity has decided to transfer an amount equal to what? Additional depreciation to revenue reserve from revaluation surplus. From revaluation surplus. An amount equal to additional depreciation will be transferred from revaluation surplus to revenue reserve. This is the option given under AS 10. So they have opted for that option. This type of question can be a perfect question from examination point of view, which can be asked in your exam. Okay? So let us start. So we will start with what? 1/4/2020. What is the initial cost? Initial cost is what? 10 lakh. So first we'll calculate accumulated depreciation for how many years? 2 years. That will be 10 lakh minus 2 lakh divided by 10 into 2 is equal to 1 lakh. Pakka na? So this will become carrying amount at year end 2. At year end 2 na? This become how much? 8,40,000. Then at the beginning, with this only we'll do add revaluation gain. This will be credited to what? Revaluation surplus. So it is given that it was revalued by what? We will add 4 lakh. So this will become 12 lakh 40,000. So this will become revised carrying amount at beginning of year 3. Correct? Now after this 2 year, so 2 year depreciation will charge less subsequent accumulated depreciation. So now it will be 12 lakh 40,000 minus 2 lakh, एक काम करो इसको 2 लाख 40 कर दो फॉर सिंप्लिसिटी, हाँ, अदरवाइज बड़ा 2 लाख 40,000, ओके. तो माइनस 2 लाख 40,000 डिवाइड बाई 8 इंटू 2 इज इक्वल टू 2 लाख 30,000. हाउ मच? 10 लाख डिवाइड बाई 8 ना, क्या कर रहे हैं, इंटू 2 लाख 50,000. It is 2 lakh 50,000. So what is the carrying amount as on year end? 2, 3, 4, 4 na. This is 2 year na. 2, 3, 4. Year end 4. How much? 9 lakh 90,000. Now we'll compare with recoverable amount. Recoverable amount given how much? 6 lakh. So what is the impairment loss? Impairment loss is equal to 3 lakh. Now we need to find out how much of this impairment loss will be charged to revaluation surplus and how much will be charged to impairment, profit and loss account. This you have understood. What was the balance of revaluation surplus beginning? It was 4 lakh. But out of these, some amount will be transferred to retain your revenue reserve. So how much has been transferred to revenue reserve? Batao. Understood? So I have given one shortcut. Shortcut is what? Whenever SLM, there is amount of revaluation surplus divided by remaining useful life. What is the remaining useful life? Divide by it. Always do in this way. Because they will not ask RBM for this question, I know. If they ask RBM, to be careful. They need to first find out depreciation on original cost, compare with depreciation on revalued amount. That difference will be additional depreciation. What is fine? So 4 lakh divided by 8, how much? Into what? 2 year na? It is 1 lakh. So how much is there? 3 lakh. So 3 lakh will be, out of this 3 lakh 90,000, how much will be adjusted with revaluation surplus? And balance 90,000 will be charged to PL. Understood? This is the answer. This is the answer. So this is one question which I am expecting, which is a beautiful question. Simple question, so you can do it by your own. But this is one question where normally students do wrong. Normally students do wrong. And can you say, if they ask simple question of non-revalued asset, so very easy then. Then so very easy na. Correct. They may also ask one more point, what will be depreciation of 5th year? So depreciation of 5th year will be on revised carrying amount. What is the revised carrying amount? Revised carrying amount is what? 6 lakh. 6 lakh na. So 6 lakh will be now depreciated for remaining useful life. 6 lakh will be depreciated for remaining useful life. Understood? Got this point? Have you understood this calculation? This calculation have you understood? Chalega? Yes sir. So this is one question which I want to take, have taken. Now let us come to thoda sa concept of CGU. Now CGU, I'll just give you a very simple way. Whenever there is a cash generating unit, now you know what is CGU. CGU means what? Group of smallest group of assets which are capable of generating cash flow independently from other assets. So why there is a concept of CGU? Because there is quite possible that individual assets are not able to generate cash flow. For example, this camera got damaged. Can you find out value in use for this camera? No, because that is not capable to generate cash flow independently. It can generate cash flow by taking the help of other assets in this classroom. So this classroom become one CGU. This classroom become one CGU. Understood? Yes sir. So for CGU, I am just giving one statement. If you can revise this, so all questions can be done. Correct. If goodwill and corporate asset can be allocated to CGU. Understood? Correct? Okay. Then in this we follow bottom up test. Only one bottom up test. So first you need to identify CGU. So they will give you CGU A, B, C like this. So you need to write down the carrying amount of CGU. Carrying amount of CGU. In this we need to allocate what? Goodwill. In the ratio given in the question. Whatever ratio given, allocate. Understood? You need to also allocate what? Corporate asset as per the ratio given in the question. Ratio will be given in the question only. So this become total carrying amount. Total carrying amount after allocation. This will be compared with what? Recoverable amount of CGU. That will be also given in the question. And if recoverable amount is what? Less than carrying amount, this will become total impairment loss of that CGU. Total impairment loss of that CGU. This loss will be first allocated to what? Will be first allocated to goodwill. To the extent of their allocated carrying amount. To the extent of their allocated carrying amount. Allocated carrying amount means this. This amount now. This amount. To the extent of this allocated carrying amount. And then we'll find out balance impairment loss. Now this balance impairment loss will be allocated to CGU and what? Corporate asset. CM is what? Better write down corporate asset. CM is carrying amount. Corporate asset in the ratio of their carrying amount. In the ratio of their carrying amount. So that you can allocate now. So this will be allocated in the ratio of their carrying amount. Understood? Have you understood? If you have understood the statement, so any questions can be done. Have you understood this point? Correct? Any doubt? 1 second. First find out carrying amount of CGU. This will be given in the question. Then allocate goodwill as per the ratio given in the question. Suppose they have said goodwill will be allocated only to A and B. So allocate in A and B. Suppose it is given the question goodwill is only allocated to A. So only allocate to A. If it is given ABC, to allocate to ABC as per the information given in the question. Then allocate corporate asset as per the ratio given in the question. Then find out total carrying amount. Then compare with the recoverable amount. They might give you NSP and value in use for each CGU. So we'll take higher one. Means recoverable amount, the formula remains same. NSP or value in use, whichever is higher. Correct. Then we'll find out impairment loss. This impairment loss will first allocate goodwill to the extent of the allocated carrying amount. Any balance impairment loss will be allocated CGU and corporate asset in the ratio of their carrying amount. Carrying amount means what? Ratio of carrying amount means these two. This is the ratio of carrying amount. Huh? This is the ratio of carrying amount. Correct. Better first always write on corporate asset, then write on goodwill. Understood? Correct. Now, sometime what happened? They have not given ratio of allocation, but they have said it will be allocated. So first for goodwill, first preference will be given to fair value of CGU on the date of acquisition. Date of acquisition means date of amalgamation, you can say. When the goodwill was recognized, means on the date of amalgamation. Okay, goodwill will rise in case of amalgamation only. So when you have acquired that business, on that date what was the fair value CGU? In that ratio it will be allocated. If that is not given, then we'll find a relative ratio. Relative ratio means what? Carrying amount of CGU multiplied by useful life. If that is also not given, then carrying amount of CGU. If the ratio is not given, then they said it will be allocated. It is allocated, but the ratio is not given. Then in this order, in this ratio, you can allocate. First preference will be this, second preference will be this, third preference will be this. For this, we'll use relative ratio or what? Carrying amount. Chalega. This become what? When goodwill and corporate asset can be allocated. But if goodwill and corporate asset cannot be allocated, then first use what? Bottom up test. Then use top down test. So bottom up test will be same as we have done right now. First apply bottom up test without allocating goodwill or corporate asset. There may be two corporate assets, one can be allocated, one cannot be allocated. So whatever not allocated, that you don't add. Understood now? So bottom up test will be as it is. Now after bottom up test means now we are doing what? Top down test. So first we'll find out revised carrying amount. Revised carrying amount of what? Of larger CGU means entity as a total. So revised carrying amount, can I say we can find out of CGU A, CGU B, CGU C, corporate asset and goodwill. This is after impairment loss which has been calculated in bottom up test. That you can find out. So this you can find out now. So this become the total carrying amount of the entity. In this, we will compare with the recoverable amount of the entity that will be given in the question. So can I say if recoverable amount of the entity is less than the total carrying amount of the entity, so this will be the impairment loss. This impairment loss will be first allocated to what? Goodwill. First to goodwill. And balance to what? Balance to unallocated, means the corporate asset which remain unallocated. Unallocated corporate asset in the ratio of their carrying amount. So of course, from my point of view, they will not ask this point. They will ask this only bottom up test in exam if they ask. But first to goodwill to the extent of this amount. Any balance will be allocated to corporate asset which remain unallocated in previous test in the ratio of their carrying amount. If there are two unallocated in the ratio of carrying amount, normally in exam they give one unallocated, but there can be two or more than two corporate assets. There can be two or more than two corporate assets. So I am just discussing the para given in AS28. From exam point we can see balance to unallocated because there will be one unallocated corporate asset. But practically there can be two or more than two corporate assets. So in the ratio of their carrying amount. Understood? Chalega? Yes sir. So can I say this statement if you revise, then ho gaya done? All questions can be done. So this much reading is not required. Means from exam point of view, this much is what detailed discussion has been done. But net effect remains same. Chalega. Then last point is reversal of an impairment loss. Reversal. So can I say whenever there is an indicator of reversal, so we should reverse the previously recognized impairment loss to the extent of some amount. That amount we need to calculate. Are you getting what I am saying? To the extent of some amount, that amount we need to calculate. From my point, reversal wala point they will not ask, because they have not given any question in ICAI study material for reversal. But let us do only one point is there. Let us discuss that. So this chapter will be covered from whatever point of view. Correct. So reversal of impairment loss. So one thing is there that this will be also done at the end of each balance sheet date. Whenever there is what? Indicator for reversal. Indicator once again external and internal. That is just reverse of that reversal. That this is just reverse of that indicator whatever we have done for impairment loss. Okay. Means the asset market value has increased significantly. Significant favorable effect. There was adverse effect. Market interest has been declined. Correct. Significant favorable changes in the method of production, etc. Correct. Evidence that economic performance of asset is now better than expected. So reversal, what they are saying, reversal will be lower of what two amount. So amount of reversal will be lower of point number E. Lower of what? First, recoverable amount minus carrying amount. Second is what? Bolo? Carrying amount as if no impairment loss was ever charged. Means you need to find out the carrying amount as if no impairment loss was ever charged. You need to find out carrying amount in that situation. Compare with the actual carrying amount. The lower of these two will be what? Reversal. Maximum reversal allowed. Understood. Lower of these two, minus mat kar dena. Lower of these two. The formula is very simple. The recoverable amount will be given recoverable amount minus carrying amount. You need to only calculate a carrying amount as if no impairment loss was ever charged. So start from the beginning. Ignore impairment loss. Find out carrying amount on the date of reversal. Compare with the actual carrying amount. The lower of these two will be the amount of reversal. Done. Okay. So this chapter is completed from exam point of view. All discussion I have done. All discussion I have done. This exam point of view this much. In class I think all the points I have said. Okay sir. So AS28 is also completed. Okay. Okay sir. Okay. So I think AS13, let us do AS13. AS13. Accounting standard 13. Okay. Now AS13 is for accounting for investment. However, there is one investment chapter also. Means they have also, we have done some investment accounting also. Investment accounting, remember? We used to prepare 3-column accounting. Investment in fixed income bearing investment. Investment in variable income bearing investment. Remember? Correct. In this chapter only. Correct. Okay. You remember that chapter now? Okay, sir. So let us revise. I will do complete revision. Complete revision. So first, meaning of investment. What is the meaning of investment? Investment are asset held by an entity for earning income by way of dividend, interest or rent, or capital appreciation or any other benefit. So any investment which are held for generating investment income. Investment income is what? Interest income, dividend income or rental income. Correct. Or for capital appreciation or for both. Or for both. Or investment. Correct. There is one special point ki any shares or debentures or any other security held as stock in trade are not investment, that are inventory only, but their valuation is done as what? This chapter to the extent of current investment, means cost price of fair value whichever is lower, cost price of fair value whichever is lower. However, they are accounted for and disclosed in the financial statement as per AS13 to the extent they relate to what? Current investment. Now for valuation purpose, कि how to value at each balance sheet date. See, for measurement purpose, each investment has been divided into what? Current investment and long-term investment. What do you mean by current investment? Current investment are those investments which are readily realizable and which are expected, which are intended to be held not more than 12 months from the date of purchase. Means I will say short-term investment we can say, which are expected to be sold within 12 months from the date of purchase. Within 12 months from the date of purchase, that will become current investment. So how to find out the carrying amount of such current investment? Very simple, cost price or fair value, whichever is lower. Cost price or fair value, whichever is lower. Correct. Now fair value for listed shares will be always market price. For unlisted, can I say unlisted does not have any market price. So for unlisted we need to find out fair value. So that can be intrinsic value. Now you know intrinsic value. Are bol na. So you can find out the fair value by using intrinsic value method. I think if you have done FM, so you have done one method, dividend capitalization method, D1 by KE. I also know something. You have done that D1 or D0 by KE? D1 means what? Means future dividend at what? Same, there is no growth. But if there is growth, then what is the formula? D1 by KE minus G. That is FM. Don't apply in what? Accounts exam. Means the fair value will be given the question. I am just linking with FM. Because now you have done FM, so I can link with FM now. At that time when I have done AST, that time you are not having knowledge of FM. So I was not supposed to link that time. Then I say cost price variable will have. But now you can understand now fair value means what? So for listed it will be market price. For unlisted we need to find out fair value. So one method you know intrinsic value method. One you know dividend yield value method as per your FM teacher. Whichever is higher, lower. Whichever is lower. So cost price will be given, fair value will be given, you need to compare. In accounts exam, you need to only compare. Correct. Now can you say any reduction in the carrying amount, any reduction to fair value, and the reversal of such reduction are transferred to PL account. So any reduction become loss, reversal of such reduction become gain, will be transferred to PL account. For example, initially the cost price was 100, then the fair value was 90. So how much reduction? So this will be transferred to PL. Next year, correct now. Once again cost price, you compare what? Cost price and fair value na. Next year cost price is 100 and the fair value become 110. So what is the carrying amount? 100 now. So carrying amount is 100. So this is reverse now. Reversal of previous write down. So how much reverse? 10 got reverse. So what was the loss of last year got reverse in current year. So that reversal will be gain and that gain will be also transferred to PL. Correct. Accounting treatment. For reduction in fair value, PL account debit to investment. For reversal, investment account debit to PL. Chalega? Yes sir. Long term investment means what? Any investment which are not current investment are long term investment. Now for the purpose of finding out carrying amount, so carrying amount will be always at cost price. Always cost price less provision for permanent decline. You remember provision for permanent decline? Means any decline of temporary nature should be ignored. We should not create any provision for temporary decline. So any permanent decline provision we create and this will become the carrying amount of such investment. Okay. Understood. Now provision for diminution shall be made to recognize the decline other than temporary in the value of investment. Understood? Correct. What will be journal entry for permanent decline? PL account debit to provision for permanent decline. Now if the reduction in carrying amount is reversed, we suppose that permanent decline got reversed due to changes in the market whatever, then reverse it. Then journal entry what? Provision for permanent decline to what? PL. Understood? Correct? Yes sir. This I hope you have understood. Now current investment, whenever we compare for current investment, comparison is done at cost price or fair value. Comparison is done on item wise. Means one investment will be compared with, no. The item wise. Item wise means each investment, investment 1, investment 2, investment 3, investment 4, investment 5. So whether we'll do item wise or we'll do category wise. So what they are saying, this comparison can be done either individual means item wise or category wise, but not on overall basis. Category means what? Can I say equity shares become one category? Preference shares become one category, so that become category wise. So either you can do category wise or item wise, but you can't do overall wise. Correct? But for long term investment, when you calculate provision for permanent decline, that will be always what? Individual, item wise. It cannot be done on category wise. It cannot be done on category. Means each item permanent decline should be calculated separately. So these are some points. Now coming to investment property. Can I say any property which are held for generating rental income or for capital appreciation, that become investment property. So investment property is covered in AS 13, not in AS 10. But what AS 13 says that their carrying amount will be calculated by using cost model given under AS 10. So their depreciation will be calculated as per AS 10. Their impairment will be covered as per AS 28. Understood? So investment property are always considered as long-term investment, and investment property is an investment in land or building that are held for earning income by way of rental or capital appreciation of both. Investment property is accounted as per cost model as prescribed in AS 10, and same thing is given. Check karo. Means can I say revaluation model is not permitted for investment property? Correct. Revaluation model is not permitted for investment property. Means can I say in this way? Can I say in this way? Just try to understand. PP, intangible asset, investment property. Okay. Understood? For this Ind AS 16, Ind AS 26, Ind AS AS 16. Oh, Ind AS final में चले जाता हूँ मैं. 1 second. It is AS 10, AS 26 and AS 13. Okay. Ind AS whenever I say I go to final. Okay. It is AS 10, AS 26 and AS 13. Now for PP we have cost model or revaluation model. For intangible asset we have cost model or, and for investment property we have cost model. Understood? This cost model is given under AS 10. This revaluation model is given under AS 10. This cost model is given under AS 26. This cost model as per AS 10. Understood? So AS 13 says it will be as per cost model as prescribed in AS 10. Are you able to understand what I am saying? So don't say as per AS 10 cost model is applicable. So as per AS 13 for investment property cost model is applicable as per AS 10. Got this point? Correct? Yes sir. Chalo. Understood this point. Now how to find out cost price of investment? Cost price of investment means what? Purchase price. Add all the expenses which are directly attributable. For example, brokerage and fee, taxes on purchase, expenses to claim title will be added. Correct. If acquired in exchange of non-monetary assets, same formula. Fair value of asset given up plus minus cash adjustment, or fair value asset received, whichever is clearly evident. Acquired in exchange for shares or any other securities, the cost price will be equal to, it is only given fair value of securities issued in AS 13. We will do this much only. However, in AS 26 what is given? Asset received or securities issued, whichever is clearly evident. But here they have given cost price is equal to fair value of securities issued. So we will go as per AS 13. Chalega. This reclassification is very important from exam point of view. Normally they ask this question in exam for 5 marks. Reclassification means what? Long-term investment may be reclassified to current investment, or current investment may be reclassified to long-term investment. If the intention change, if the purpose change, suppose you purchase initially current investment, now you have decided to hold it for longer period of time. So it will be reclassified from current to long term. So whenever reclassification is done, at what value reclassification will be done, that we are going to study. So what they are saying, where long term investment are reclassified as current investment, long term reclassified as current, then reclassification are made at lower of cost price or carrying amount, cost price or carrying amount, whichever is lower on the date of transfer, cost price or carrying amount, whichever is lower on the date of transfer. But when current investment are reclassified as long term, current to long term, then reclassification are done at cost price or fair value on the date of transfer, whichever is lower. याद रहेगा. So whenever long term to current, cost or carrying amount, carrying amount will be what? Carrying amount will be what? Cost less provision for permanent decline. Correct. Here cost of fair value, whichever is lower on the date of transfer. So एक बार revise, just revise and go. Correct. Disposal of investment. So it's very easy. That this I will discuss again when I will take that investment account wala topic right now. So on disposal of investment, any difference between the sale price and the cost price of assets sold will be transferred to PL. Okay. Applicability of AS13, this is disclosure requirement you can read. Now what I want to teach you right now, the revision of what? Investment account. You remember this investment account? Two type of question they will ask. Either fixed income bearing investment or variable income bearing investment. Fixed income is normally they ask debentures or bonds or government securities. Here they normally ask equity shares. Equity shares from examination point of view. Correct now? One minute. Sure. Let us do a revision of what? Revision of what? Fixed income bearing investment. Right. So whenever you purchase investment, so it can be two type of purchase. Either you purchase directly from company or you purchase directly from market, stock market. So when you purchase directly from company, then journal entry is investment account debit to bank. Investment account debit to bank at cost price. Cost price, you know, all the expenses will be also added. All the brokerage expense, stamp duty expense will be also added. If you purchase from stock market, then journal entry will be investment account debit, interest account debit to bank. You remember? Investment account debit to investment debited with X interest cost price. So investment will be always debited with X interest cost price. However, you have done payment with including interest. Correct. So any interest portion from last due date to the date of purchase will be what? Interest portion. So that will interest will be what? Debited. So that interest has been paid. Remember, it has been paid to whom? To the seller. To the seller. Correct. You remember X interest come interest. थोड़ा थोड़ा याद हो रहा है. This revision is required. Therefore, I am doing revision. It means whenever investment are purchased from market, stock market, interest will be paid to the seller from last due date to the date of purchase, irrespective of X interest quotation or cum interest quotation given in the question. Means irrespective of whatever quotation is given, they have given X interest, cum interest, whatever quotation given, interest will be paid by buyer to seller from last due date to the date of purchase. That we can calculate. It means how to calculate X interest cost price. So in class I said always start with come interest purchase price. So one format I have given, always use this format. Come interest purchase price less interest paid from last due date to the date of purchase. This will become what? X interest purchase price. In this will add what? All the expenses. Expenses on purchase. It can be brokerage, stamp duty, securities transaction tax, etc., etc., etc. This will become X interest cost price. Correct. Now, if in the question they have given this quotation, so this format you can use, or they may give this quotation, then also use this format only. Then also calculate what interest and do back calculation. Remember. So either they will give come interest price or they will give X interest price. Your format remains same. Always in exam start with what? Come interest price. Understood? Correct. Now, when you are doing this journal entry, investment account debit, so we'll debit with this amount now. We'll debit with this amount. The investment account will be debited with this amount. Interest amount will be debited with this amount. To bank with the total. To bank with the total. Chalega. Have you understood? Then, for interest received on due dates, now can I say on due date, interest will be received from whom? From company. As per the contractual agreement, that interest may be received on monthly basis, or quarterly basis, or half yearly basis, or yearly basis. If monthly basis, so can I say in a year 12 times? If quarterly basis, so in a year 4 times. If half yearly basis, in a year 2 times. If annual basis, in a year 1 time. So whenever receive on due date, journal entry is bank account debit interest. So be careful. If it is monthly, so you will do 1 by 12. Understood? Correct. Can I say interest will be always calculated on nominal value? On nominal value. So can I say always calculated on which basis? On nominal value. On nominal value. Got this point? Correct. I hope understood this point. Then on sale of investment, can I say we need to find out gain or loss on sale? Gain or loss on sale. For that also I have given one format. So always start with what? Come interest sale price less interest paid or received. Interest received. From whom? From buyer. From last due date to the date of sale. That will become X interest sale price. From that we deduct what? Selling expense. And that will be net. That will be what? Net sale profit. From that we'll deduct average cost price of investment sold. This will be gain or loss on sale. Gain or loss on sale. Correct. So what journal entry will do for receipt of sale profit? It will be bank account debit to interest to investment. Correct. Can I say investment will be with net sale profit? Net sale profit means which amount? This amount. The interest will be with which amount? This amount. And bank will be with total. So bank account debit to interest account to investment account. What is journal entry for gain on sale? Investment account debit to gain. The gain will be transferred to PL. What journal entry for loss? Loss on sale to investment. Loss will be transferred to PL. Understood? Got this point? Once again, this format remains same irrespective of the quotation given, whether it is given come interest sale price or X interest sale price. If it means come interest quotation is given, start from this. And if X interest, start from this and do back calculation. So your format remains same whether the quotation is X interest or come interest. Correct. Now the question is that how to calculate this average cost price. Average cost price. So as per AS 13, normally as per AS 13, cost price of investment sold is calculated by applying weighted average price method. So if you follow AS 13, it is always weighted average price method. So if question is silent, what will you use? Weighted average price method. What is the formula to find out the average cost price of investment sold? I have given balance of amount column divided by balance of nominal value column into nominal value of investment sold. You remember this formula? Balance below balance of amount column divided by balance of nominal value column into nominal value of investment sold. However, if question require cost price of investment sold can be calculated by using FIFO method. So you will use FIFO only when specified in the question. If not specified, always use weighted average price method. FIFO I think you can do by your own. चलेगा, फर्स्ट इन फर्स्ट आउट मेथड. Understood this much? Correct. Now closing balance of investment, whatever closing balance you have calculated, so can you see if it is current investment, it should be valued at cost price or fair value. Fair value means market price, whatever is given, whichever is lower. Any reduction will be transferred to PL account. Any reduction will be charged to profit and loss account. So at year end closing investment will be valued as per AS 13 if current investment value at cost price or fair value whichever lower. If for reduction in price, then it is via PL account debit to investment. But if long-term investment, it will valued at cost price. Means they will not give provision for permanent decline. This type of question they have never asked. So it will valued at cost price only. However, if question is current, you will assume what? Current investment. Question is current, always assume the investment given is current investment and compare with the market price given. Correct. Then one point we have done, if you remember, sometime what happened, due date and year end are same, due date of interest and year end are same, then there is no accrued investment, there is no accrued interest because all interest will be received. But if due date and year end are different, so can you see from last due date to year end there will be some accrued interest. So on closing investment we will calculate what? Accrued interest, and opening investment also will calculate accrued interest, remember. So for closing investment, what journal entry? Accrued interest to interest income. For opening, what journal entry? Interest account debit to accrued interest. Correct now. Means this formula, this format we have given now. Three column. So if there is a two balance brought down, this is nominal value, this is the amount. So we will calculate what? Interest. And here by carried down. So this is closing, so we will calculate what? Accrued interest from last due date to the year end. Even though question is this is the implied we will do it. So don't forget this interest. Don't forget this interest. Chalega. This was what? Fixed income. Now let us come to what? Variable income. I am not taking any questions, huh? Questions so you can do now. In class, so we have done all the questions, huh? Chalo. So come to variable income now. Variable income. You are getting everything, na? याद आ रहा है? हाँ? Okay. So, accounting treatment of variable income bearing investment. So for purchase of investment, what journal entry? Investment account debit to bank. Can you say now there is no concept, means there is a concept of come dividend, next dividend, but ignore that. Correct now, means we do not recognize dividend income or dividend paid separately. So it will be investment account debit to bank. Irrespective of quotation. Irrespective of quotation. There we have done X interest, current interest, so we have done investment account debit, interest account debit to bank. But here investment account debit to bank. Whatever amount you have paid, means with cost price. So what do you mean by cost price? Purchase price, whether come dividend or ex dividend. Means don't deduct what? Dividend. Have you understood this point? So purchase price, whether come dividend or ex dividend. Then add all expenses on purchase. All will be added, this will become cost price. Correct. Have you understood? Understood this note I have given this to you, understood. Then for sale of investment, what journal entry? For sale, bank account debit to investment. Once again, no dividend wala point. Bank account debit to investment. Investment will be credited with the net sale profit. Same amount bank, so bank account debit to investment. If there is a gain, journal entry investment account debit to gain, gain will be transferred to PL. If loss to investment, loss will be also transferred to PL. Calculation of gain on sale or loss on sale. First we'll write down the sale price less selling expense. This will become net sale profit. Compare with the average cost price of investment sold. This will be what? Gain or loss. This gain or loss will be transferred to PL. Now coming to dividend receipt. Now dividend receipt, as per AS 13, this dividend receipt are of two types. Pre-acquisition dividend and post-acquisition dividend. All dividend are final dividend, interim dividend. That too you know. initially we discussed that it is can be final dividend, it can be interim dividend. That too you know now. Final dividend means dividend of last year paid in current year. Interim dividend means current year dividend paid in current year. Now to become expert in that. Correct. Now we are discussing as per year 13 whatever dividend received are of two types. Pre-acquisition dividend and post-acquisition dividend. Pre-acquisition dividend means dividend has been declared from pre-acquisition profit. Post-acquisition dividend means dividend which has been declared from post-acquisition profit. Correct. So what AS 13 says that if any pre-acquisition dividend received, so that will be deducted from cost price of investment. What journal entry will do? Bank account debit to investment. Bank account debit to investment. Correct. Means it will be credited to dividend column or amount column. Amount column. Amount column. Be careful. Amount column. Correct. But if there is a post-acquisition dividend, journal entry bank account debit dividend income, and it will be credited to which column? Dividend income column. In investment account. In investment account. Chalega. Understood? Yes, sir. Then some note I have given from examination point of view. This note is very important. If final dividend and interim dividend received on opening holding means opening balance of shares, will be always what? Post. Don't apply your common sense. Apply, always give what? Post, to save time in exam. So any final dividend or any interim dividend received on opening holding will be always considered as post acquisition dividend. Okay? Now final dividend received on any shares purchased during the year. So any shares purchased during the year before declaration of dividend will be always pre-acquisition dividend. Will be always pre-acquisition dividend. Final dividend means what I want to say, just try to understand. Suppose this is 1/4, this is 30th June, and this is 31st July. So final dividend was declared यहाँ पर. So you are holding 1000 shares यहाँ पर. You additionally purchase 1000 shares यहाँ पर. So if question is silent, this dividend, any dividend on this will be always what? Post. Any dividend on this will be always what? Pre, because this is related to previous year, na? Correct? Now, interim dividend on both will be what? Always post. Always post. If question is silent, and question will be always silent. Understood? Correct? If question has given some point, then also net effect will remain same. Net effect will remain same from examination point of view. However, any interim dividend received on such share will be assumed to be post acquisition dividend. Got this point? Yes, sir. Then next point. Next point was what? Bonus shares, if you remember. Bonus shares. Where is the bonus share? Bonus shares. So bonus share declared by the company. So any bonus share which is declared by the company will be received by the shareholders. So when it is received by the shareholders, so what journal entry? No journal entry, only number of shares will increase. Only number of shares will increase, no journal entry. Can I say automatically the cost price will be, average cost price will reduce because number of shares will increase. The cost price remains same. So average cost price will be automatically reduced. Correct? So it means bonus shares issued by the company to their existing equity shareholders without any consideration. However, bonus shares are capitalization profit in the books of company. Therefore, following journal entry will be recorded in the books of company. In the books of company, I have given this as extra knowledge, which will be used in some other chapter. So, in the books of company, what journal entry we have done? Reserve and surplus to equity share capital. Reserve and surplus account debit to equity share capital. However, in the books of investor, as per AS 13, no journal entry will be recorded for any bonus share received by the investor. However, number of shares will increase by number of bonus shares received. Correct. Then the last point, what we have done, right shares. What do you mean by right shares? Right shares are offered to the existing equity share at a price which is lower than market price. So there can be two situations. Either the investor has subscribed that right share, or they have renounced the right to some other friend or relative. Correct? At some consideration. So if they have subscribed for purchase of such right share, what journal entry? Investment account debit to bank. Your amount column will increase by the cost price paid. So investment account debit to bank. Correct. But if there is a sale or transfer of right, but it is sale of right, is sale of right shares. It is sale of right, but not right shares. Because if you have not purchased it, how can you sell it? So you have transferred the right, not right shares. Remember? So whenever there is sale of right, detailed discussion I have done in class, if you remember. But what was the output of the entire discussion? Output was that if the original shares are not purchased at come right, if original shares are not purchased at come right, understood? Then entire sale proceed of that right will be transferred to PL. Correct. The entire sale proceed on transfer to right will be on transfer right will be transferred to PL. Journal entry is what? Bank account debit to sale of right, and the sale of right will be transferred to PL. But if original shares are purchased at come right, it means, can I say, whatever you have paid on purchase, you have paid some extra amount. Now that amount is recovered. So that amount, whatever recovered, is deducted from cost price of investment. So sale proceed on transfer right will be deducted from cost price of investment. Okay. So bank account debit to investment we have done. Remember this point? Correct. If question is silent, what will assume? Come right or not come right? Not come right. Understood. The question is silent about come right price, then it will be assumed that original shares are not purchased at come right and will always pass. Means ICAI has done always this journal entry. ICAI has done always this journal entry. And normally out of 10, 9 questions it will be silent. Only I think one question of this nature has been given in ICAI study material. So that can be asked. That can be asked. Chalega. Got this point. So I think all discussion done. This you have understood the point? Correct? I think this much is enough for this chapter. This chapter it is enough. Okay. Chalo. Now, so we have covered what AS we have covered till now. So AS 2, AS 10, 12, 13, 16, 26, 28. So this much we have covered. Tomorrow we'll do this much only. I will take some extra questions, whatever you have doubt. You have doubt in any question? So we'll do in this AS only, na? So we'll take that question. Tomorrow write down. Tomorrow we'll take what AS you want. AS 4 कर लेते हैं. AS 29. बोलो. AS 19 कर लो. AS 20 कर लो. AS 7, 9 I'll do together. AS 20. One more AS 70. This 5 will be our target. Our target will be this 5. Okay? This will be our 5 target. So you just come revising all the questions. If you have doubt, that we can discuss. Today this much only. Now if you have any doubt, you can ask me. Any questions? Huh? AS 16. AS 16. You have the question, na? 1 minute. I need to open it. AS 16. AS 16. Bolo. What was the question number? Question number 11. Bolo. In this question, related expense is given. I have not done this question in class. I have done, na? Y Limited made the following borrowing: 14.8% debenture which was issued, which was taken on 1/1 400 lakh. 14.5% term loan on 1/7/2001 for 200 lakh. 14.2% term loan on 1/9 300 lakh. First was general, second one was specific, and third was general. Related expense also given. So related expense, this will be also added to the borrowing cost. This will be also added to the borrowing cost. 14.8% debenture and 14.2% term loan were raised for the entire project, and 14.5% term loan were raised for financing a plant and machinery. Qualifying asset for borrowing are factory shed, plant and machinery, other fixed asset. Assume that project is ready for commercial production on 1/1/2002. On 1/1/2002 means what is the in the next year. In the next year, okay. Now year end is 31st/12. Year end is 31st/12. Okay. So can we start? No. We are doing question number 11. First we'll calculate what? You have to help me. Calculation of actual borrowing cost. First, can you give me specific borrowing? So we have a specific borrowing, which one? It is 14.5% term loan, na? So 14.5% term loan. What is the amount of loan? 200 lakhs into 14.5% into how many months? 6 by Pakka? 6 by 12. How much it is coming? 14.5 plus related expense how much? 2 lakh. Total become 16.5. Okay, sir. Correct. Now we'll come to non-specific borrowing. Non-specific borrowing. It is how much? 14.8% debenture. So 14.8% debenture. What is the amount of loan? 400 lakh into 14.8% for entire year 12 by 12. Can you give me interest cost? Huh? How much? 59.2 plus what is the related expense? Related expense 1 lakh, na? It becomes 60.20. Then next one is what? It is 14.2%. 14.2% term loan is equal. What is the amount? 300 lakh into 14.2% into. So you need to count the number of months. It is 19. So 9, 10, 11, 12. 4 by 12. So can you give me what is the interest? 14 point plus related expense how much? 2.5. So it become how much? 16.70. What is the total of these two? These two. So 60.20 plus 16.70. 76.90. Now you will calculate point number B, capitalization rate. So capitalization rate 76.90 divided by 400 into 12 by 12 plus 300 into 4 by 12 into 100 into 100 na is equal to how much? $15.38%. 15.38%. Correct. Now, can I say during the year they have done expenditure on this? So factory said entire from non-specific loan. Plant machinery 900. Out of this, how much specific loan? So how much they have used from non-specific? 700. Other fixed assets entire from non-specific. So can you say? Can you give me? Let us now calculate calculation of borrowing cost to be capitalized. So I am doing for non-specific first. Non-specific borrowing. So we have factory shed and plant and machinery and other fixed assets. Can you give me the amount of expenditure? 100, 700, 100. We'll apply which rate? 15.38%. Then 15.38%. Then 15.38%. How much it is coming? 15.38. This is 15.38. This is how much? 107.66. Total, can you give me? It is 15.38, 15.38, 107.66. How much? 138.42. But whether amount of capitalization can be more than actual borrowing cost. It means, can I say now 70? What was the actual borrowing cost? 76.90 will be allocated in this ratio, or you can see it will be allocated in this ratio. Both ratio will be same only, but I will suggest better allocate this ratio or this ratio, whatever you allocate. 76.9 divide by what? 138.42 into 15.38. How much? So it's coming 8.54. This will be also 8.54. Difference कितना है? हाँ? 59.82 ना? 82. So this become what? Non-specific borrowing. And specific borrowing will be entirely capitalized. Entirely capitalized to what? Plant and machinery. That is 16.5. So this will be the total borrowing cost to be capitalized. You can do total, total and total. Understood? What was the doubt? Huh? This allocation na? Understood your doubt? Chalo. Any more questions you have doubt? AS28. Come to AS28. AS28. Now, if in AS28 chapter, if question is silent, always use cost model. Don't use revaluation model by your own. Acha. In AS28 question, if suppose question is silent about the treatment of revaluation surplus, whether it will be derecognized, whether it will be transferred to revenue reserve on derecognition or during the remaining useful life, that you are asking? Correct now. Then I will suggest you that if you have no time, use easy one. But if you have time, give both. If you have time means if that much perfection you have, then I don't. If entity has opted for this, then this will be your answer. If entity has opted for this, then this will be your answer. I will say this is the better answer, because in exam they will show your what? Total concept na. If you have time and time permit allow, so do both na. If you know both. If you think that you are not comfortable in that and question is silent, better do easy one. And let them decide how much marks they will give. Now, these marks will be given by them. But I will say if you have given both, then your answer become better answer na. So of course full marks will be given to you. Okay, na? So that depends upon how you are reacting in exam hall. I mean right now I will say you will not be able to do. So how you are reacting in exam hall, that is more important. Chalega? Okay. But if question is silent for that particular case, I will say give both the option. Case 1, this is the point. Case 2, this is the point. Okay, sir. Any more doubt? I think I have done both the case in class. Chalo, theek hai. Whatever. Okay, this much only. So today this much only. We'll meet tomorrow, same time for that whatever 5 accounting standard I have given. Thank you very much for today. Bye bye. Take care.